You and I have sat down a number of times. I want to talk to you for a moment about responsible investing. I know how important it is to you, but a couple years ago, you made a decision after the Newtown shooting. You didn't want to be involved in any companies that were associated with guns. Well, Cerberus, you were invested then, you're invested now. It was said they were going to be selling out of one of their businesses. They still haven't. So what's going on?
Every time I come to New York, if I'm seeing you, believe me, I'm seeing them. They know me on a first-name basis. You know, it's a private company. First off, we don't own the company. We've invested in a partnership. We own an illiquid share of an illiquid company. And they actually have tried to liquidate it and monetize it. We're on their case.
You mean Cerberus has tried to sell Freedom Group, and there's just no buyers?
Well, and to create liquidity for investors like us. Not all their LPs want out. You can imagine the LPs in Texas and in other states are more than happy that they own that company. We got out of the public companies, the companies we can control. We got out of those, and this is the last part of our portfolio. And private equity is tough. It's illiquid, and it's hard to get out of. But we have been working, and we actually have 3 or 4 opportunities, we think, to be able to create some liquidity. I've had people, when I come on the show, people are calling me and offering me prices. So far, the highest bid was 10 cents on the dollar. I've had as low as $1. My favorite was a venture firm that offered to, if I paid them, they would take it off our hands.
Then are you putting a time limit on this, saying, at some point, I'm just selling out?
No, I'm a fiduciary. My board has emphasized they would like to get liquidity. We would like to get out. We feel that there's reputation risk. We're also concerned about the economics of the company. So it's an illiquid investment in an illiquid partnership. I can't put a timetable on it. It proves it's very hard to sell things like that.
How about other concerns? Climate change. Clearly, we're seeing the effects in the state of California. Is it affecting the way you invest?
Very much so. I have to frankly laugh at the climate deniers, and I have some in my family. I hear it, but boy, I see it in my daily life all the time. And for our board, we're California teachers. It's very critical, and it's a big issue. Sustainability across the board. So not just energy. I was at the Bloomberg New Energy Conference, learned a lot of fascinating stuff about the future. 2025 is going to look so different from today, especially in New York. I guarantee you the world will look dramatically different, and it will become a dominant focus for all investors because it's really going to impact any investment you have as the climate keeps changing. Stronger storms, bigger droughts, bigger winters. You might be digging yourself out again in New York.
I don't want to talk about that.
I hear it's going to be, 85 here today.
Stronger storms. How about stronger dollar? What's a stronger dollar mean to you?
For us, it's an opportunity and a threat because a third of our portfolio is outside the U.S. So we've been hedging the yen and we've been hedging the euro. I'll admit, not as much as we probably should have, but for our non-U.S. investments, it's a big focus. It's really a risk, and so we want to be hedged in this time period where the dollar is strong. I pay benefits in dollars, but it's also a diversification for us.
How about your innovation portfolio? Last year, you put this pilot program in place to really take a closer look at the value of hedge fund investing. What have you learned?
We've learned that it's not the panacea. It's the fact that we're a big institutional investor. We have our own California rules. But, this conference, and it's getting loud behind us, but this conference is a good example of innovation where we're picking up ideas not just in hedge funds, but across the board in microfinance, all kinds of areas. And what we're finding is in this kind of a market that waffles a bit, that creates an opportunity. And our global macro funds have done well in the weak markets, but they've done very poorly in the last 5 years as these markets have run, not surprising. So they play a role, but they're not the whole answer.
You and I have talked about activism in the past, and recently we've heard Stan Druckenmiller, Larry Fink talk about the threat of activism and how it's making CEOs make poor short-term decisions. What do you think?
Well, we're big believers in activism. We're active share owners, but then again, we're also passive, which means we're going to own the U.S. equity market and own it for 30 years. So I'm frustrated that CEOs are afraid, or not afraid, but putting up walls to most of the activist investors. And I've said there are white hats and we think there are black hats, and it's going to come out over time. We invest with activists that are long-term investors. And I really would say I attended a conference with Larry in New York on short-termism as a risk problem. And you hit it on the head. CEOs think about every 90 days. I want them to think about 5 years. And most of them cannot even think out to 6 months. That's a long-term decision. We know the best things in life take time and are hard and take work. And that's why I want CEOs to think longer term.